The break since last trade analysis is another way to check for certain loss-making behavior visible in the trader's performance. As we all know, trading is much more complex than it may seem at first sight. We go through an extensive analysis process, we track the price of the asset, we consider our risk and money management, and we wait for the right entry time for the trade. After that, the process is by far not finished, as we have to monitor the trade, potentially adjust, exit, and review our trade. Given the preparation to enter a trade is quite complex, the complexity requires us to have a free mind and our focus placed on trading. Rational decision-making does not work in extreme emotional states. Therefore, we should also assign a fair amount of time to our trade preparation. A lack of preparation may result in an average underperformance in our trade. The required time for preparation and the required breaks in our trading in order to get us to full power again may differ among people. Therefore, we develop this analysis in order to present you with your trade performance depending on how much break you did between your trades. Do you show signs of overtrading in your account, with a high number of trades in a short time negatively affecting your trading performance? Let's take a look at the analysis. At the output for this trader, we can clearly see that the average performance per trade gets worse the fewer breaks the trader does in between the trades. For trades with a minimum 30 minutes break since the last trade, the trader shows a strong performance of around 5 pips per trade. While trades with a break of only up to 5 minutes, the performance is negative. If the trade is open while another trade is ongoing, the average performance is even worse. Moving with the cursor over the bars, we see that the trader has 155 trades which were performed while another trade was ongoing, representing 10% of the total trades. With this behavior, the trader actually made a loss amounting to 1,137 USD. If he would have performed those trades with the average performance of a trade with minimum 30 minutes break in between, that result would not have been minus 1,137 USD, but 2,923 USD instead. You can see that such minor issues, like the amount of time of preparation for a trade, can have a huge influence on your trading. Psychological effects such as impatience or excessive risk-taking may trigger behavior like this. Does your trading show a similar pattern? With the transparency on your own trading, you are equipped to work on your own trading behavior and slowly improve your own trading performance. You may also want to check your output chart with a time frame of only the last 1 or 3 months in order to assess if your performance has changed recently. You can best use this function to also track your performance while you are working on certain behavior. The benchmark shows that also for profitable traders, there is a tendency of having less profitable trades the shorter the breaks they take. However, what makes them a good trader is that they have far more trades executed with a longer break since their last trade. The output of this chart may have less significance for swing traders, which usually have a much longer time in between their trades. For scalpers, on the other hand, the trade execution might be much quicker. However, also for them, it is crucial to be best prepared for every single trade. To summarize, if your chart shows a similar pattern such as seen in the example, and if there is a high number of trades executed with only very minor breaks in between your trades, you face a similar loss-making pattern like this trader. Take a lower lot size in those trades, and giving yourself enough breaks in order to focus again may really help you to improve your performance. Routines such as having a glass of water, a coffee, some push-ups, or whatever in between your trades can actually help you in implementing this takeaway from analysis like this into your trading behavior. You might rather want to miss another trading opportunity than having a bigger loss in trade which you were not fully prepared. Looking at the length of the break, after which your average performance actually stayed quite flat, can help you to identify the break length that you require to perform the best. In the beginning of this video, we elaborated that tendency to overtrade your account can have multiple psychological effects as a trigger. To check whether you show a loss-making behavior which is related to only very short breaks, especially after a loss trade, please refer to the analysis Break After Loss Trade. In case you do have a significant loss-making pattern due to short breaks in between your trades, you may choose to receive a notification from us, warning that you have just entered another position with a short breaks which on average end up with underperformance in your trades. Trading can be very demanding, and a little technical support may actually help you to free your mind and focus better.